You know your rules. You wrote them. You understand them. You've seen why they work, and still, you don't follow them. Not always. Not when it matters the most. And that is where most traders lose. Not because they don't know what to do, but because they don't do what they already know. This is the part nobody talks about, the gap between knowing and doing. Because in trading, knowledge is not the problem. Execution is. You can watch every video, learn every strategy, understand risk management perfectly, but in the moment of decision, everything changes. You hesitate, you rush, you break your own rules, and after the trade, you already know what went wrong. You say it to yourself, I shouldn't have taken that. I knew this wasn't my setup. I broke my plan. And yet, you did it anyway. So the real question is not, how do I learn better rules? The real question is, why can't you follow the rules you already have? The answer is simple. Your mind is not designed for trading. Your mind is designed for survival. And survival reacts, it doesn't wait. In the market, waiting is required. Patience is required. But your brain is constantly scanning for action. It wants movement. It wants certainty. It wants control. And when the market is slow, your mind becomes uncomfortable. So you force a trade, not because the setup is there, but because you need something to happen. This is the first mistake. You trade to remove boredom, not to execute a plan. The second problem is emotion. Before entering a trade, you are calm, logical, clear. But the moment you enter, you are exposed. Now money is involved. Now your brain switches. It starts calculating risk. Fear appears, hope appears, doubt appears, and suddenly your rules feel less important. You close early, you hold too long, you move your stop loss. Not because your strategy changed, but because your emotions did. This is why most traders fail. They trust their emotions more than their rules. The third problem is lack of structure. Most traders say they have rules, but their rules are not strong enough. They are not defined clearly. They are not written properly. And most importantly, they are not enforced. A rule that is not enforced is just a suggestion. Professional traders don't treat rules as options. They treat them as limits. No setup, no trade. Hit stop loss, exit. 2 losses, stop trading. Simple, clear, non-negotiable. The fourth problem is overexposure. You spend too much time in the market. You watch every candle, every move, every tick, and the longer you stay, the weaker your discipline becomes. Because fatigue reduces control. A tired mind makes impulsive decisions. That's why disciplined traders don't sit all day. They define their time, they execute, and they leave. The fifth problem is dopamine. Your brain is used to fast rewards, social media, short videos, constant stimulation, and in many cases, other habits that train your brain to seek instant pleasure. So when you sit in front of the market and nothing happens, your brain struggles. It wants action. It wants reward. So you take a trade, even when there is no setup, because you are not trading the market, you are feeding your mind. And this is dangerous because the market does not reward impatience. Now the question is, how do you fix this? How do you actually follow your rules? The answer is not motivation, it is structure. The first step is writing your rules clearly, not in your mind, on paper. Define when you enter, when you exit, how much you risk, when you stop trading. Make it simple. Because complexity creates confusion, and confusion leads to mistakes. The second step is reducing your trading window. Do not sit all day. Choose your hours. 1 session, 2 hours. Maximum. When time is limited, decisions become sharper. The third step is removing unnecessary trades. If the setup is not perfect, do nothing. You do not get paid for trading more. You get paid for trading better. The fourth step is controlling your environment. Reduce distractions, reduce stimulation, reduce noise. Because your environment shapes your behavior. A distracted environment creates a distracted trader. The fifth step is accountability. Track your behavior, not just your profits. At the end of the day, one, ask yourself, did I follow my rules? Yes or no. Nothing else matters. Because if you follow your rules consistently, profits follow over time. But if you break your rules, losses are guaranteed. The final step is acceptance. You must accept that you will miss trades. You must accept that not every day has opportunities. You must accept that patience is part of the process, because the moment you accept this, you stop forcing the market. And when you stop forcing the market, you start trading properly. In the end, the problem was never your strategy, it was your behavior. And the moment you fix your behavior, everything changes, because trading was never about knowing more. It was about doing less, but doing it right. This is Capital Era.